Hey guys, my name is Nirmal. Welcome back to a new video. Today I'm going to help you with 4 ways to make money in stock market. First things first, you need to understand something called company. Company is a form of business organization where it has a separate legal entity. It has nothing to do with the owners. It is managed by a separate group of persons called board of directors, which are appointed by the owners called shareholders. Now, there are two types of companies that we have. One is called private company and another one is called public company. So, private company is a company where there are a number of people who are private among themselves. Private in the sense they know each other very well. Small number of people can provide small funds only. But when the company is trying to expand, the way is to go public, and this process is called IPO, which stands for initial public offering, and this process is called IPO. When this IPO is completed, the company's shares get listed in the stock market. And I will tell you, just go and Google this term recent IPOs in last 1 year, and you will find like 9 out of 10 IPOs have gained good return within a period of 2 weeks. Normally you need to invest around 14 to 15,000 in an IPO. That is the minimum limit that we have for retail investors, and if you get the shares, definitely you are going to make money if the company is good. Otherwise, if company is not good, ultimately you are going to get the shares anyhow because demand won't be there. But if the company is good, there are going to be a lot of people who are applying for the same company, and since there are too many applications, there are less chances that you will get the allotment of the shares. But if you get, definitely you'll make money out of it. This is called making money through IPO. Number 2 is when this company gets listed in the stock market. Now anybody can buy because now public has the shares, and now these public, if they want to sell their shares, there are a number of people to buy this company. So when this thing happens, it's called trading. But we are talking about investment. Trading I'll come to the later on. But first we are talking about investment. Investment in the sense you buy the company because you feel that this company is going to grow in future, and if the company grows, your price of the share that you are holding, it is also going to grow, and in the long run you will create a lot of wealth. That is the second way to make money, and this is the best way to make money because once you become a long-term investor in a good company, definitely you are going to create a lot of wealth in the long run. But it requires a lot of patience, it requires a lot of time, and it requires consistent investment, right? That is a good way to make money. That is called investment. You can invest lump sum or through SIP, the way you choose. But when you invest, which leads to our third way of making money, it is by dividend. Because if you are investing in good companies, these good companies will make good profit, and this good profit will go to the good owners that the company is having, because ultimately the profits of the company belongs to the owner, and these owners will get a share out of whatever company is making. So this profit is called as dividend, and you will get a passive income through dividend in the long run. So invest in good companies where you will get good dividend, and in the long run, if you have accumulated good number of shares, definitely the passive income through dividend is going to be really good. Last but not the least that I'm talking about, it is your income through trading. This trading income is again taxed under PGBP. That is why we call it as trading income, but there are different categories of trade. But first things first, let's understand what is trading. Trading means buying and selling with the motive of earning profit. That is the simple idea. In investment, you're not looking for profit because you're not looking to sell, you are investing. But in trading, you buy it because you want to sell it for a profit. That is the ultimate aim. So if you're buying some shares, holding until you get your target price, whatever the target you're looking for, the selling price, then it is called as swing trading, because you're waiting for that swing to happen. But if you are waiting for that swing to happen within a day, it is called as intraday trading. In intraday trading, what you do, you buy a share, you sell it by the end of the day, like during the market hours, but within a day. That is why it is called as intraday. And you can do the reverse also, like you can sell it first and then buy it. This is called short selling. If you don't understand, just Google it, you will find the exact meaning of what short selling is, but it is possible in intraday. And apart from this, you can go for futures and options. Futures and options is a bit different from equity segment, but it is somehow related to equity and stock market. It happens in the stock market itself. In Bombay Stock Exchange, there is no FNO, that is futures and options, but in National Stock Exchange, you will find FNO. And as the word future says, future is simply nothing but the future of the company. It will be a little bit higher or lower side. But something that is interesting is called option trading. Option trading is really good. Option trading is nothing but there are two types of options, call option or put option, that you are trying to predict whether market will go up or down. The thing is that you can make a lot of money if your prediction is right with a lower investment, the same amount of profit if you're looking for, and with the same prediction, with the same kind of profit that you're looking for, you need to invest a lot of money in the actual cash segment, that is the equity segment. But if your prediction is right about the stock, you can go ahead with the options and you will make a lot of money with like less amount of investment. That is why people go for futures and options, but it is highly risky. I won't suggest at all. Start with the delivery trades, start with the investing, swing trading, then slowly once you learn all these tactics of trading, then you can go ahead with it. Okay, that's it for this video. I hope I did not bore you guys, and if this video was somehow informative for you, please give this video a thumbs up and please consider subscribing. Thank you so much for watching. Bye, see you in the next video.